just make sure this is all good. Hello? Hello? Okay, perfect. Oh, don't wanna repeat. Just check that's all good. Okay, that's fine. Booming up now. Very nice. Live here. Perfect. Hello, hello, hello. Hello, Garen. Hello, Matthew. Hello, Clyde. Hello, Danny. Hope everyone's all good. How is everyone doing? Oh, let me just move this. There we go. Perfect. How's everyone doing today? Hello, like always. Hello, hello, hello. So in this live, we're going to be doing our normal live first. So this live, I'm just going to basically go over what price action is doing now, what I'm looking for price action to do sort of tomorrow, etc. Come up with some levels and go from there. And then I'll be doing my bootcamp live after this. I thought I'd do this live first just because I think this is a very important one with what's gone on sort of today. I think it's been very, very, very important. So yeah. Some very interesting price action day. So a lot to go over. Should be a really, really good one. And then I'll be doing my bootcamp live after this. Hello, Chris. Hello, Nars. Hello, hello, hello. Living the dream. Good, Garen. Just busy, over the Christmas period, seeing family and everything like that. It's been busy, and then keeping up with the obviously live Sunday to Thursday, and then boot camp every single day. And then going from just been everywhere. So difficult, but it's good. Okay, I'm Nay. What do you reckon happened? I'm Nay for you to do that. Great day today. Nice, Ryan. Was that hello, Andy? Hello, hello, hello. I'm worried about Asia destroying the train. The same, Matthew. Who's this handsome devil? Hello, Jay. Let me just grab this. Boom. Perfect. There we go. But yeah, how is everyone doing today? How's everyone getting along? Back we're all started. Yeah, Tony. This is absolutely booming, by the way. I think I am going to close some. I am currently in buy positions. I've been stacking buys throughout the day, so you can sort of see where I've been sort of buying for this day, and then gotten on this bull flag here. So I'm going to look to take partials very, very soon, probably on the live, I think it's important to, after big highs, taking profits. Jay flirting as per, always. I used stop losses, but didn't know where to position them. The market suddenly shifted lower than the trend line and hit my stop loss every time. So I'm Nate. You were looking to get into buy positions, but your stop loss was potentially too tight. You were getting in too early. Is that what you're saying? Clyde, what do you mean? I'll be marking up levels and going over exactly what I'm doing at the charts now and what I'll be looking to do over the next sort of day or so. I'm going to be outlining that full plan here. I do outline my sort of plan, what's happened during the day and what I think is going to happen going forward every night from Sunday to Thursday. And if you do enjoy the live, double tapping the screen helps sort of spread it around. In the group and it's third. Jay, that's brilliant. How's New York going though, Jay? Are you there fully through New Year? You're going to be there a long time then. Are you just there over Christmas, or you there till New Year? What's the plan? So you level from last night 9:22, and then this morning 10:41. Not sure, missed something, or didn't get the entry stop loss. Like always, so I did have a level on last night, which was all the way down here. And it didn't quite hit this level. Didn't bounce off the trend line first, so didn't get the entry there, unfortunately. And then obviously when it came to sort of London session, got entries on this bull flag, which I put in, just adding to buy positions. That is mainly what I've been doing for the past month, really, is just adding to already existing buy positions, and that's sort of the main thing, which has been working out very nicely. There's important things to go over with bull flags, and then also breakout and retest. I did put something I think really good inside the private group. Hello, hello Chigski. Hello. But I did put something really good inside the private group, which is about breakouts and retests. And actually, after I put that in, we had this breakout and retest, and then eventually came back to the high, and you can see pretty much pit perfect hit it, which was obviously really nice. So yeah, we'll go over those breakout and retests. If you are inside the private group, I definitely recommend going back, going up in the group and looking at that message where I explain breakout and retests in detail, because I think it really does. And I went quite ham on that message because I wanted it to be very clear why breakout and retests work, what the thesis is behind it, and how you can utilize it in your trading, because they are very strong. And so yeah. Ian, so with this bull flag here, first off, I'll go to the actual entry that I got. The reason why I entered this bull flag was very simple, really. We had a huge move up. When gold has a massive move up in price, I'm going to look for it to continue. I'm never going to short gold when we're having a huge move up. If it moves up, if a car accelerates really quickly, I'm not going to jump in the way of that car. And so gold boomed up. I'm not going to jump in the way. I'm going to try and get in that car and continue with it. And so when we basically started to form this bull flag here, which I pulled from, I believe, these highs. I was just looking to get in at these lows, which were a golden pocket from this low here to this high. Golden pocket with lower extremity of the bull flag. So I was looking, and you can see how well this was respected. I mean, like 4 wicks in a row. And so I was just looking to get in at that bull flag. That's the reason. I had unbelievable confidence in the bias. Why did I have unbelievable confidence in the bias? Because we had just boomed. Like, look at how strong this move up is. I want to get in on that move. So my bias is to the upside. We're forming a bull flag, which normally breaks out to the upside. We're coming back down to a golden pocket and the lower extremity of the bull flag. All of those things lined up. I'm going to add to buy positions to take those trades. And then literally the exact same thing happened here. With this bull flag, and so I was just basically layering in, adding a small bit as we came down to the lower extremity of this bull flag before this other huge move up. So that's basically what I was looking for. When you've got on gold and on most pairs, there's a few days, sort of a few days a month, where the bias is just very clear, and you could ask anyone on the street, what do you think's going to happen here? And most people will get it right, okay? When gold absolutely flies through the roof, chances are it's going to continue to go that way. Like, your bias is set. I don't even care about sells. I'm just looking for buys. We form a pattern, which I trade a lot. We hit a nice level. I'm not going to overcomplicate it. I'm just going to enter the buy position, and it worked out very nicely. So this is Fu Manchu. Again, I wouldn't even, until you've got your levels down, I wouldn't even look at indicators or look at confirmations. The vast majority, 95% of why I enter a trade is actually the levels and price action, okay? This is just to confirm what I already know. Okay, that's what it's basically doing. I'm looking for confirmation bias through this. And a few reasons which did help me enter these trades was money flow pulled back into the red for those who are looking at Fu Manchu, but until you're more advanced, until you've got those levels down, I'd just recommend staying away from any indicator really. But money flow was in the red. The best buy positions come when money flow's in the red. And so I was just like, okay, money flows in the red, all of these other things all lining up perfectly. But until you're more advanced, until you've got those levels, and you can be very basic with support and resistance. Until you've got that support and resistance down, then looking at any indicators is probably not the best idea. I'm Nay. Bull flags normally break to the upside. Yeah, more often than not, they break up to the upside. But that's just one thing that gives you a slight edge. All good, Ian. So I'm Nay. I didn't, on these trades here, I didn't place a stop loss for those trades. I already was in a buy position with a predetermined stop loss. So I had a buy position already, and what I did was I just added to the position, take profit from the position. The stop loss was like miles below. I've moved it all the way up now because we've had like a huge move to the upside. And this is the same across all my accounts. Some of them I've still got. So one account which I have my stop loss still quite a bit away, just because I want to give it breathing room, like a lot of breathing room. But on that account, I've moved my stop loss up a lot now. So I was just adding to the position. Something which you won't hear a lot is a lot of people say, like, you know, avoid adding to losing positions, because we know that adding to a losing position, you know, isn't a good idea. A lot of beginners, what do losing traders normally do? They add to losing positions. And so by extension, what we can determine is winning traders add to winning positions. So I had proven, and I put this in the private group as well, proven the idea of a buy is correct, and so I just added to the position. So I was just adding to a winning position. And that's basically what today has been. It's been like one trade, but like I added to the position when we moved up into profit. I think it's a very, 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 very good thing to do. Add to winners, don't add to losers. It's very good. EJ YouTube, I'm on gold on the 5-minute time frame. This is the 5-minute time frame, but time frames don't matter. If you want less information, zoom out. If you want more information, zoom in. I think there's no set time frame, which is amazing. I think as a rule of thumb, you should have 3 time frames. Your higher time frame, which you use to gauge your environment. Your second time frame, which is your midterm time frame. That's where you mark up levels. For me, higher time frames are the 1/4 hour, and then midterm time frames around the 24-minute or the 30-minute, around there. And then your execution time frame. So for me, that's like the 1 minute, the 3 minute, the 5 minute, even the 6 minute. And that's where I look for actual confirmations to enter the trades. So yeah. But I think rule of thumb, having 3 time frames. Higher time frame, where you gauge your environment. What do I mean by gauge your environment? Just look around. Like, zoom out, look around. What the hell's going on? Second time frame is where you actually mark up levels to trade. You need to have levels to trade. You need to have scaffolding on the chart, okay? Otherwise, you're just flying blind, okay? You're going to go off the track. You need to have those rails up where, okay, I'm only going to trade if this happens. Not, trading isn't, in my opinion, do this. It's if this, then this. If this, then this. And so having levels, having areas you will trade, just getting rid of the rest of it is important. And then the third one is confirmations. So zooming into those lower time frames to try and optimize that entry and try and get the best entry possible to increase that risk to reward. Hello, Steph. Hello, hello, hello. Graham. When you already have long-term buys, do these account for 1% risk? Yeah, so I always have 1%. Well, actually, I depends on the account. On that account, I'll have like 0.5%, if that, risk. Most accounts I do between like 0.1 and very rarely over 0.5% risk. I don't risk really more than that ever. So yeah. But that depends on your account equity. Obviously, when you're scaling up a lot, and I say like 1%, something which is very important in trading as well, is a lot of the time once you've got a large amount of capital on your account. This is something that I see a lot. I see a lot of people with, like, you know, online, and they've got like millions and millions in their trading account. It's like, why? Why have you got millions in your trading account? You're only risking X amount per trade. You don't need all of that capital on your account. You could take, you know, let's say you got 2 million on your account. You can take 1.5 million of that, invest it in this, invest it in that, and allow your money to make you more money. You don't need that on your account. Just make sure you've got that sort of liquidity there, I guess. But you don't need all of your trading capital actually on your account. You want your capital to work for you. If you've got, you know, £1 million account or whatever, having that full million on the account is not only risky, but also, you know, you can invest it elsewhere and make money on that money, if that makes sense. But that's for when you get to sort of bigger numbers. Hello, Steve. Hello. Come back to Sunday's level. We'll take a quick look at Bitcoin quickly. I haven't really been looking at Bitcoin just because gold's been so interesting. Gold's been really, really good, and Bitcoin for the last sort of 3 months Just hasn't posed that many nice opportunities. Was it? Where was the? Yeah, like we've just been ranging in here. Like we formed this bear flag, we've broke out from it, but not with much volume. Like I got these two levels on here, which are still in play, and these are the highest conviction levels I see on Bitcoin right now. And in between this zone, I'm not going to trade. Like this just doesn't look nice. Like we're just going from the low just straight to the high. Yeah, it just doesn't look nice to trade in my opinion. So I think we will eventually drop to this 78k level where I will be looking to enter buy positions. But until then, it's just not looking too good, in my opinion. Oh, that was on this chart. There we go. Yeah, Matthew, all the way back. Diversify. Chigsy, so not financial advice, but something which is important to consider when investing. Again, not financial advice, is look at what you uniquely know. So if you have worked in a certain industry, then you might have a better knowledge of that industry than other people. So it might be better to look at investing in those areas. But something which is very important, not financial advice, with investing is if you look at who performs better out of men and women in investing, women averagely perform better because men try and think that they're better investors than they are, and they try and outperform the market. So they're trying to look for particular stocks, and they're doing all this and they're doing all that, and that leads to worse returns. Whereas women tend to just invest it in the market. They just put it in index funds and leave it. So overall investing, the best way really to do it, not financial advice, what I do personally, is just index funds. Like index funds, property if you can, and then maybe a bit of that extra capital, put it in more high risk, high reward plays, if you will. But for most people, just keeping it simple is the way to go. Great, not financial advice, yeah. But I think on the whole, just keeping it simple. Investing shouldn't be super complicated. For most people, I remember there was a very famous bet with Warren Buffett. He put up $1 million bet. Warren Buffett's one of the greatest investors of all time. It was a very famous bet. He put up a bet saying, okay, any hedge fund, any trader, anything, I bet $1 million that you won't outperform the market over the next whatever years. And within like a year, everyone threw in the towel and they didn't beat him. So try not to outperform the market. If you can, then great. But most people just going with the market's the way to go. Yeah, exactly. I'm now. Yeah. Matthew, how long have you been trading and how long did you spend using demos? So digital, I've been trading for about between 6 and 7 years now. And then demo trading, at the beginning, I demo traded for quite a while, but I quickly realized that demo trading it's got its use case, but on the whole, it's not that good because trading is very much entirely about psychology. So I'm trying to think of a good analogy. What's a good analogy? If you can't swim and I chuck you in a swimming pool, okay, and you've got no armbands on, you're gonna have to learn how to swim. Otherwise, you're gonna drown. So you're gonna give it your all. Whereas if I chuck you in a swimming pool and you've got all the flotation devices on, you're just gonna sit there and chill, okay? That's similar to on a demo account. On a demo account, anyone can be profitable. It's not hard, okay? Because your psychology isn't getting in the way. Psychology is everything in trading. Every single mistake you make in trading comes down to psychology, more specifically fear. And so by trading on a demo account, you don't really... it has no bearing on how you perform on a live account. There is a time and a place for demo account, like figuring out what confirmations to use, backtesting a certain system to see how it's performed and see how it works. But in terms of your actual profitability, live account, and I realized that early-ish on, and understanding how money affects your mindset and going from there. Darren. But it is important. It is important. A lot of people trade on demo, and I do see the benefits. You know, there's a time and a place. But on the whole, if you backtest for a year and you're extremely profitable on a demo account, when you go onto a live account, that will all go out the window. It helps. Yeah, Matthew, that's a great idea. Look, there's definitely a time and a place for demo. I'm not saying it's bad at all. There's definitely we did a boot camp section on it actually on back testing, and there is definitely a time and a place, and it can be very very good. But really understanding that okay, even if you're profitable on a demo account, that does not mean you're going to be profitable on a live account. So just make sure that is definitely you're aware of that. Because it is very, very important. But that's a really, really good question. And again, guys, let me know if you've got any trading questions in, like, they can be super specific ones, they can be super basic ones, and I'll happily go into detail. SRS, I do run a private group which is linked on the YouTube description. In there, you gain access to signals, analysis, courses, full community of thousands of members who are talking about trading, etc. each and every day, and all of that good stuff. I mean, the reviews and everything are phenomenal. We've done in-person meetups and everything like that as well. So if you want to learn trading, if you want to get better at trading, or if you're just interested and want to speak to more people in the trading space in an environment where you can say, you know, whatever you want, you're not going to get restricted like pretty much everywhere in the trading space. If you've got an opinion, most likely they'll restrict you now because they want you to go with their narrative or no narrative. You can have any opinion and you can speak openly about trading. Darren, I'm waiting longer. I've took a lot of partials on it, so I'm not too bothered with where it goes now. If it starts to lose momentum, then I'll take partials further down. I'm not too bothered, but yeah, as it goes up further, I'll take partials. If it doesn't go up further and it starts to lose momentum, then I'll just move my stop loss up and put it under each low. Best private in the world. Appreciate that, Andy. Like always, we'll get you added after this, mate. We'll get you added. We do like to do a lot of like security stuff on Discord because there's so many scams on Discord. It's insane. So many people pretending to be me on there, and then just so many scams like on Discord. It's crazy. They really need to sort it. Who said agree with that? Max, the Discord is awesome. Highly recommend for anyone that hasn't joined. Yeah, I really do. I think the Discord's just a really good place, and it's something that I would really like want when I started trading. I think, you know, trading's definitely a team game. A lot of people think trading's like this lone wolf thing, and you've got to like be on your own and just make money. But you know, working together, learning from other people's mistakes is, you know, it's how humans have got better at everything. So it's no different in trading. Chilling 30k in profit like it's Tesco meal deal. I practiced 45k funded on demo and it's sitting at 150k. But it teaches you to not trade as much as that was my downfall, and sometimes still come my personal view. Yeah, I completely agree, Matthew. Look, I completely agree with that. It is really easy to make money on a demo account, and it can, like you say, Matthew, it can reinforce bad habits. On a demo account, you're not penalized for taking loads of trades and everything like that. And then also, on most demo accounts, it doesn't factor in spreads, fees, everything like that, which does, you know, play a part. And so you're losing out on that. And yeah, it can really reinforce bad habits, demo trading can. So be careful. Like, understand that demo trading has not much real impact on your live trading, and understand that it can build up very bad habits. I mean, on a demo account, if you're up, you know, 100k, okay, let's say, you're not going to feel like you need to close that. Whereas on a live account, as soon as you get to like maybe 5-10k, you're going to think, oh, that's 5-10k, I need to close that position. And you wouldn't run into 100k. So it just doesn't, they've got no bearing on each other, really. Appreciate that, Chris. Okay, I'm Nate. Yeah, the last couple of hours especially have been, yeah, very busy. I've gone from Newcastle back down to Birmingham today, so that's been a bit interesting. Okay, Darren, there was something, this happened like yesterday, I believe. I was talking to Ben about this. The Telegram, some people messaged me on like other accounts because their Telegram was like automatically deleted or something, which was really not good. I mean, there's a lot of Discord isn't doing anything about it, but obviously there's so many scams nowadays. If you type a wrong message, like your account will just get like automatically just suspended or something. So if that does happen to you, I remember this happened to someone in the Discord as well, and I walked him through how to get it sorted. But yeah, it's a pain. Gold's come with the retest. Yeah, we'll take a look at this. We have got this level here, previous highs here, which is particularly nice. I'm going to remove this off now, and I'm going to put a golden pocket from this low to this high up here. We have got a nice high here, which I do really like actually. So there we go. And something which I wanted to re-go over on this live is breakout and retests. So let me just put this here. So I did put a really good message in the private group earlier about how to trade a breakout and retest and why they're actually so strong. And I think I'd like to go back over why they are so strong again, because it's a very, very simple setup that you can use to do very well, especially when you use it with confluence. So we'll go over exactly how to use that setup in a minute. So Chigsy, I'm going to get into that now. I'm going to be marking up levels now. It's a bit weird when gold is at an all-time high. It's I like to pull fibs, and so if gold's just making new highs, it's very difficult to pull fibs, because as soon as we take out this high, that golden pocket's invalidated, and it's like, okay. So it's a bit weird when gold's forming all-time highs, but we'll still come up with some nice levels and key areas to look out for come tomorrow. And yeah, let me just drag this. This was such a nice golden pocket. Let's just drag this all the way up, and then let's also drag this up there. There we go. Okay, this looks good. Okay, cool, Darren. I appreciate that. Let's go. Hello, Ben. Ben was on yesterday's live. If you want to go check out yesterday's live as well, did like a in-person Q&A with Ben. I was up in Newcastle, so had a trip out and saw Ben. It was his birthday the other day, and so that was really good. So you can go check that out as well on the YouTube. And by the way, guys, if you do enjoy the live, double tapping the screen does help, like spread the live around and this, that, and the other. On my 4th day trade, enjoyed the group last week. Still very basic knowledge of the charts and how to read them, but the guys in the group and the boot camp helping big time. So cheers, Max. Nice, Gareth. I really appreciate that, mate. And Gareth, I definitely recommend getting in a call booked in with Adam or Jay. Over the Christmas period, I don't know what their schedules are looking like, but getting a call booked in with them just to like really start on that right foot. Maybe they can like show you something which you haven't noticed yet, or put you on the right path or something like this. Could be really good opportunity as well. So definitely giving that a go if you haven't already is a good idea. Hello Tom, hello Joe, hello Benjamin, hello. In the last bull flag there was a breakthrough followed by a drop. I know exactly the one you're going on about. This here, you're on about this breakthrough here before a drop on the late. Yeah, is this normal sign and any indicator to know it will go back up instead of crashing there? So at this point here, do you mean at this point here, I'm nay? Or no, right before the big green? Do you mean like this and then this like breakout and retest? Here? I think it was on like this, wasn't it? Yeah, that's right. So you don't know if it's going to break out and just come down. This is why I don't enter when we break out, because it's a very, very bad time to enter, in my opinion. I enter at the lower extremity or on the retest. So over here, you can see I'm entering at the lows. So the lows. I'm not entering when we break out. I'm entering at the lows. This is to give me the highest probability. I don't want to get in when we break out. And this is because breakouts, actually, they're a time, in my opinion, breakouts are a time for you to watch. Not enter, but watch. Why is that? And this leads into the message I put in the private group earlier. So when we have a breakout, okay, what's happening there is basically a lot of like momentum algorithms and a lot of FOMO traders and everything are entering buy positions on the breakout. They all want to get in a buy, okay? Oh, we're breaking out, FOMO, buy. And so that's a great opportunity for big institutions to like basically eat up all of that liquidity to enter sell positions. So institutions need liquidity to enter trades, okay? They've got so many orders to fill. They can't just, okay, I want to open up however many contracts. They can't just fully fill that. It doesn't make sense. If you go to, it's like you going to, let's say you go to a car boot sale, and let's say you've got 10,000 pairs of socks, okay? At a car boot sale, you're not going to be able to sell that many socks. You need to advertise that car boot sale so more people come so you can offload your pairs of socks, okay? Does that make sense so far, okay? You're at a car boot sale, there's no one there. You can't get rid of those 10,000 pairs of socks. And you don't want to let them go for really cheap, because otherwise that's what's called slippage. You don't want to let them go for really cheap. You want to make sure you're selling them for a good price. They're a great pair of socks. And so you need to advertise that and make that car boot sale look very appealing. So more people come, so you've got more people to sell your socks to, okay? In the charts, when a breakout occurs, that's the market, that's the institutions advertising the market. They're making it look very appealing. Oh, we're breaking out. That's the people coming to the car boot sale. Then they offload their orders. They sell into that buy side liquidity. They're offloading the socks. They're selling the socks, okay? They're selling when you break out. So that's why we get a lot of fake outs when price breaks out and it doesn't actually break out and it just reverses. That's because institutions want you to get into buy positions. To get into a buy, someone's got to sell. Who's selling? Institutions. Then the price reverses. So that shows you that institutions are in a sell position. What do institutions do? They get things right. So we want to be on their side, okay? So we want to be in sells. However, there's something else which happens. If we break out from a level and nothing happens, and we just continue to break up, then what's that said? That said that institutions had a perfect opportunity to get into a lot of sell positions. Loads of people were entering buy positions. Loads. That was the perfect opportunity for them to get into a ton of sell positions, but they didn't. That tells us that institutions are confident on price continuing to the upside. Therefore, we want to be in buy positions looking for it to continue to the upside, okay? So a breakout, I think, is a period to step back and analyze and try and figure out what the big players are doing, because they show you a lot. Bit of a tangent there, and I hope that makes sense. If anything that I've just gone through doesn't make sense, please let me know in the chat and I'll happily run back through it. And also, if you do enjoy the live, double tapping the screen does help spread around the live. But yeah, let me know if that makes sense. Let me know if it doesn't make sense, and I'll happily re-go over it. A few examples of that are this here. We broke out from the high. Unbelievable conviction. What happened? We retested it, went up further. We broke out from this high. No liquidity grab. We broke up, retested it perfectly. Broke out from this high, no red candles, just perfect up. There was no selling here. Well, there was selling, but there was very minimal selling. What happened when we came back down to that level? Perfect move up. Okay, this happens over and over and over again. Danny. I need to buy some Christmas socks to fit in the Discord. Fair value between 41 and 39. I don't trade fair value gaps, but which one are you on? Are you on about between here and here? This would be considered a fair value gap. I don't trade fair value gaps. I don't like fair value gaps. For those who are joining now. So fair value gaps are a very, very popular concept now in trading due to the publicization, I think that's a word, of like things like ICT and SMC. Especially ICT, I don't like. It's all based on something called auction theory, which has been around for a lot of years. I don't particularly like it. I don't use it. But it's always good to keep these things in mind. But that would be considered a fair value gap. And look, if you do like it and you do use it, then by all means, you can look at the stars. And if you make money, then I'm not going to judge. If you're making money, you're making money. Well done. So if you make money using fair value gaps and that stuff, then fair play to you. Yeah. The sock analogy, love it. What confirmations would you recommend? So confirmations, again, they're just that. Confirmations are confirming what you already know, okay? So I really want to preface how confirmations are confirming what you already think. If you don't already think something, you don't already have a level, you don't already have an idea, then confirmations are useless. You can't confirm nothing. Yeah. But when it comes to confirmations, I like to look for divergences in price. So I look for momentum, money flow. This is the indicator that I use down here. I look for that to be going one way and price to be going the other way. When that's happening, I can see a divergence between what price is doing and what price should be doing. And then I can build confirmation from there. Okay, Drew. Well, I hope it goes well. T-Bank traders. So I'm marking up my charts, coming up with a plan for the sort of the next bit of price action. So on a night between at 8 p.m. I go live and I'll mark up my charts, coming up with a plan for tomorrow. So that's what I do sort of every single day. I just need to charge up my my phone. I'm gonna have to flick to YouTube here to see the chat. Let me pause this so it doesn't show. Okay, let me just see. So MACD is something I don't use. MACD, I used it before, but I don't really like MACD as much as I like this indicator. This indicator is called Fu Manchu. It's a really good indicator. It's based on an indicator called Market Cipher. I found that indicator because when I got into trading, I got in through crypto. And in the crypto space, that was, at the time, that was just a very, not popular thing. It was just in the crypto space. So I learned that. And then later on I switched over to Fu Manchu, as a lot of people were asking about the indicator. They wanted to use the indicator, and so Fu Manchu is literally just a free version of that indicator. So yeah, and this allows me to basically find divergences in price. So when momentum's going up but price is going down, that shows to me we could be forming a bottom. And then also another reason why I entered this trade actually was because we were forming a hidden bullish divergence. So when momentum's going down, like it is here, I'll scroll up so you can see. When momentum's going down, but price has gone up, you see this, price has gone up, but momentum's gone down. That shows to me a potential continuation in price as well. So that's something I look for as well. Let's see. What's that, Drew? Do you mind explaining what I'm now? Well, where you entered trade, what your stop loss would be, at what point. That's what stung me today. So I'm now, the trades that I entered today were very much adding to buy positions. So this one I did have. Which one was it? What time was it? It was this one here. Stop loss under this. I had it under this candle bodies here. So I tried to get in at these lows. This is on the 5-minute time frame. Slightly wider stop loss, but I wanted to get it below these candle bodies here. It was a very, very safe stop loss, and I had very, very, very high conviction for the day. So I wanted the stop loss to be a bit safer. And so just something which is very, very important, which I did speak about on yesterday's live, I think, or in the group. No, I spoke about in the Discord actually. So a stop loss, a lot of people get caught up on where to put the stop loss. Now, if you use a tighter stop loss, it's going to be easier for you to get a higher risk to reward. If you use a wider stop loss, your trade's going to be safer, but it's harder to get a higher risk to reward. So therefore, there's no best way to do it. In my opinion, the best way to do it is to find a level which you're looking to trade. Look for confirmations as we approach the level. I don't look for confirmations when we're hitting the level or once confirmation's finished. I want to see confirmations as we approach the level. When we've hit the level, then enter the trade and just look to the left-hand side of your chart and slap your stop loss below some candles on the left-hand side of your chart. There's no objective way to do stop loss that's really that's just really solid. I think doing that, look, you're going to get stopped out. It's going to happen. But over time, you're going to learn the best place to put your stop loss and build up that discretionary ability to know where to put the stop loss. Okay? Because again, the wider the stop loss, the safer it is, the harder it is to get risk to reward. Good risk to reward. The tighter it is, the easier it is to get high risk to reward, but the more likely it is that you're going to be stopped out. So we can divulge from that. There is no perfect place to put a stop loss. So when you think you should enter a trade, when you're at a level, slapping it below that level, that is the best way. And that is like the only way I can really describe. Nice, Matthew. I'm going to choose money flow is green. Is that time to look for sells? You mentioned earlier that a good time to buy is when money flows in the red. Yeah, Alex, if your bias is for buys. So if my overall bias, which is determined by going onto the higher time frame to see what's going on. Today, I didn't overcomplicate it. Gold had a massive move up. I'm going to be looking for buys. Gold is an accelerating car. I'm not going to jump in the way of that. I'm going to try and get in. And so my bias is very clear. Therefore, I don't care about sells. I couldn't care if money flows in the green. Don't care. I only care about sell side confirmation. So therefore, I care about when money flows in the red. If gold had a massive move down and my bias was to the downside, then I don't care about buys. I only care about sells and adding to sell positions, etc. And so, yeah, identifying what market you're in and then only looking for positions in that direction is important. All good, I'm now. All good. I'm just trying to turn my phone ran out of charge, which I checked the chat on, so I've got to switch over. Do you know your trade is a winning position if price moved down from the lowest point? Do you still add to it? Jing Yap. How I know my trade is a winning position if it's in profit. That's pretty much it. If we continue to make higher highs and higher lows, then it's a winning position. I'll add to the position on pullbacks. It's something that I really do sort of recommend looking into. Adding to losing positions is not a good idea. Like in most cases, okay. And you've really got to make sure your risk management is on point, okay. A lot of people over risk when sort of layering into positions, and for beginners, layering into positions, in my opinion, is a big no-go. You can easily over-risk on the position, like very easily over-risk on the position. For the vast majority of people, layering into a position is not a very good idea. Adding to losing position is not a very good idea as well. Adding to winning positions, however, is amazing. Like, it's really good, and I definitely recommend looking into it. But yeah, guys, let me know if you've got any questions, and I'm just going to look for some other levels of the chart. So we've got this level here, very nice, golden pocket, previous high, trend line. This looks nice. And what I'm going to do is I'm going to whip on session volume profile. I'm going to zoom out on the 15-minute time frame, see where the highest volume node of today was. Okay, the highest volume node. This is the highest volume node is where the most transactions took place, where the most action happened, and so this is going to be an important level going forward, and so I definitely want to have it on my chart. So see what it lines up with, see if we can find anything interesting. I'm going to remove this off my chart now. We can see we do have a high volume node just below this level as well, which is quite interesting. Let's see if we can find anything else that lines up. This doesn't really line up with anything. This is alright, previous highs, but I prefer this. 0.786. Yeah, this is nice. 0.786 plus naked point of control. So 0.786 plus naked point of control. And by the way, guys, I do post these levels inside the private group every single day with the exact trades that I'm taking. And you also get courses, boot camp, community, everything inside there. Okay. Let me move this off. Okay, I like that. That's nice. All good. Can you explain your golden pocket that you just marked up? Yes, Jigsy. So the golden pocket, basically, I pulled from this one here. So if we zoom in a bit, I pulled a golden pocket from this low, very, very clear, obvious low, to this high, very clear, obvious high. And so I pulled the golden pocket from this low here to this high, not this high, sorry, to this low. I was on the 5-minute time frame. So this low to this high, very nice low, very nice high. And this golden pocket lined up perfectly, literally pinpoint perfectly with this previous high. Now, something we went over previous in the live stream was if we find a nice high and price breaks through it with a lot of conviction, massive green candles, then we can anticipate, okay, institutions aren't selling on this breakout. It's a great opportunity for them to sell. There's loads of liquidity, yet they don't. And this says to me that the big guys in the market are still thinking there's more upside. So therefore, I want to be on their side. And the fact that the golden pocket shows a nice retracement, it lines up with this previous high, which now can act as support because big institutions and big players in the market are going to want to protect that level. It can be a really nice position. 1 to 2 trades, what strategy would you recommend using or focusing on? Tom, so in trading, there's a few things. One is, keeping things that objective is not good. So a lot of people try and make trading super mechanical and super objective. And if that was the case, then people would just code bots and print money. But as we all know, bots don't work in trading. If you've ever tried a bot, you know it doesn't work. And so we know, by extension, we know that super objective doesn't really work on the retail side of trading. And so keeping things that objective, it might work, but very low returns. The best returns, in my experience, comes from your discretionary ability. So building up the ability to know where to take profit, squeezing the most out of a position. With a 1 to 2 risk to reward, what you're basically doing is you're putting a floor on your losses, but you're also putting a ceiling on your profit. I don't want a ceiling on my profit. For example, here, I haven't got down here. I haven't got no take profit. I think I've got to take profit like all the way up at like 4,500. But outside of that, I've got no ceiling. Like I don't want a ceiling on my profit. And so I think having a ceiling on your profit isn't the best idea. And then also there isn't a best strategy. It's no strategy is the best strategy. There's a few important things to dissect from this. First off, risk management is far more important than any strategy. Far, far, far more important. Far more. Risk is one of the only thing you can control in these markets. You, me, no one can control what price is going to do. The only thing we can control is our risk and our trade management. Okay, so your risk and your trade management is 10 times, 100 times more important than any system. That's point one. That's very important. Few people really learn to really grasp that. Second point is with your system. It's not about any system. Any system can be profitable. It's when you use it and when you don't use it. That's what makes a system profitable, okay? If you want to be, I said this the other day, and it's a bit of a weird analogy, but if you want to be James Bond, okay? James Bond, licensed to kill whatever, he can kill anyone. But what makes him the best is he knows when to shoot someone and when to not, okay? That distinction is very important. So with your system, you need to understand when to execute it and when to not execute it. That is what makes a system profitable. There isn't a best system. There's no golden ticket in trading, unfortunately. And I wish there was. Oh, believe me, if there was a golden ticket in trading, I hope by now I would have found it. I've spoke to tens of thousands of traders. I've spoke to hundreds and hundreds and hundreds of profitable traders. I spoke to some of the best traders in the world, some of the biggest traders in the world. I spoke to traders from all over the world, and I'm yet to meet anyone who just makes money automatically from a trading bot. If that was the case, if that was actually real, I'm very sure I would have met them. And so I'm just super against bots. And part of it is I know a lot of people who are in that sort of space and they're pushing these bots and they're not good, okay? They're just, stay away from bots. They will not make you money. Not financial advice, of course. Max Dallas potential buyers. Greg Fluence, I like that. Bots do not work. I've tried a lot over the years. Yeah, exactly. Yes, lost 40k on a bot. Lesson learned. Yeah, tried a few bots myself. They work until they don't. Exactly. Like, yeah, anyone who's watching this is such a value point now, because I guarantee someone who's watching right now, someone here will be considering investing a bot. And there are people here who are watching this live right now who will go on to invest in a bot. You've seen it. I'm saying it, and then we've got multiple people in the chat who have been burned by it. I try and say it as much as possible because so much money is being wasted on bots, okay? They do not work. They will lose all of your money, okay? They use very malicious tactics. They use things like martingale, for example, which doubles down on losses, and loads and loads and loads of toxic things. It doesn't work. Just the idea of investing in something and just making money with no work is a fallacy. It doesn't exist. It's never existed. Yeah, you need to do work. It's just how it is. And look, I wish there was ways you could just, here's money, make me loads of money, make me rich. It doesn't exist. Or I haven't found it yet. Who knows? That's what I'm after. Okay, that's the way to be, Tom. I mean, the learning path to follow, definitely inside the, I don't mean to plug the group, but inside the group, we've got courses. We take you step by step through the system which I use, the system which other full-time traders inside the group use. And then you can ask questions on that. Literally a full course, full breakdown of everything from A to Z. Remember when someone tried pitching a bit at the last meetup until you didn't even let them speak? Nope, sorry. Yeah, that was funny, Matthew. So that's actually a good story. By the way, guys, these are the levels which I am looking at. I'm going to zoom out a bit so you guys can see them. So, and I'll be doing my bootcamp live after this as well. I'll put a link in the Telegram when I'm doing that. But at the last meetup, at like a trading event, there was a guy who tried to pitch me a bot. And like I saw right through, I said, look, I'm not dealing with this, blah blah blah. And eventually he reached out to me after the event and just sent me through a bunch of stuff. So I was just like, okay, he's tried to pitch me at this event, and then he's followed up. He's found my contact and he's messaged me. So I said, okay, send through the stuff. And I went through and dissected every single thing he sent to me. So first off, they had done very well. They had basically what they did was they launched I think it was 15 MyFX books, all of the same bot. And I went through and I found the ones they had deleted. And like all of the ones which had eventually blown up, they just retracted the account of, which is obviously not good. And then all of them were on very low pound amounts, and then the big pound amounts which they show were like backtested. Oh, this is backtested over 20 years. It means nothing. It means nothing. And so they had done a bunch of like terrible, just misleading things. Which, without if you don't have a keen eye for this thing and you don't understand that it doesn't work, then you could easily fall into that trap. But I fully went through and was like, okay, this is clearly misleading. This is a scam. This. If your results are so good, it should be extremely easy for you to get capital. You shouldn't be at a random trading event in London going up to random people asking them to invest in a bot. It's getting capital in trading. Like if you've got a bot like that, it's so easy to get capital. Like, so easy. And in reality, no matter how good their advertising is, no matter what, the capital you can get from speaking to like big dog people is just far more than you can get from any amount of retail investors. But thank you, Chigsy. I have to agree. John, the ColezTrades indicator is inside the private group. In the Discord, if you scroll down, it's like there's a ColezTrades indicator section. Basically shows support and resistance. It's really nice. My earlier comment, platform do you use to mark up your charts? Sorry, Tremaine Hamilton, cool name. I use TradingView. So TradingView is like the gold standard charting platform. It's got everything you really need. If you want to go down the order flow route and you want to look into order flow, there are better platforms to use than TradingView. But for 99.9% of use cases, TradingView is absolutely fine. And it's really good for marking up charts and just, yeah, really solid platform. So good, really good question. Let me just, I'm waiting for my phone to charge. And the bloody thing wasn't... I was wondering why it wasn't charging. What a muppet. But a stupid question. Gareth, there's no such thing as a stupid question, mate. When you say golden pocket, mate, you mean that's when you would be looking to enter around, would you look to enter a limit now or would you wait? So Gareth, it's not a stupid question at all, mate. Really good question. So this level here, I want to look for confirmations as we approach the level. Then I'll look to either place limit orders, which I do in majority of cases, or enter as we actually hit the level and as I see their reaction. So that's where that level is where I'm looking to buy. The green levels are levels which I'm looking to place buy positions from. Jason, so the Fibonacci retracement tool looks like this on TradingView. It's this one here. You can find it on the left-hand side of TradingView, third box down. And basically, if you put it on your chart, it looks like this. The settings I've got are basically the bog standard settings. I've just got, but I haven't got 0.5, 0.382, and the other ones on. I've just got these. These are the strongest ones in my opinion. And then I've turned off the background colors because I don't want my chart looking like a rainbow. And then from there, what you do is you pull it from a low to a high to get areas of support. You pull it from a high to a low to get areas of resistance. Try that. And then once you've done that, upload a screenshot into the Discord at me. We'll see if it's right. If it's right, great. Send a few more examples. If it's wrong, then we'll highlight where it's wrong. Go back, give it another go, go again. And just keep doing that. Eventually, you'll have it nailed down. It's the best way to learn fibs. Best way. Drag it from a low to a high. Send a screenshot in. If you get it right, great. Do another one. If you don't get it right, we'll identify where you got it wrong, and we'll give you some pointers. Go away, do it, and then like within a day, you'll have it nailed. Like that's the best way to learn it, by a mile. Anything like that. I'm presuming you're on one of the more advanced versions. No, Tremaine. This is just I have got a TradingView subscription, but like it should look the same. Like obviously I've got my markings up and my trend lines and everything on, but it should look very, very similar. If you want, mate, drop me a screenshot on Telegram. My Telegram is linked on the YouTube description, by the way. Drop me a message on there, and I'll take a look. Zyx Designer, so confirmations I look for momentum going up, whereas price is coming down for buy positions, or for sell positions, I look for price going up and momentum coming down. But again, I really want to hammer it home. Confirmations are just confirming what you already think. Confirmations are 5-10% of a system, if that actually. Like 80% is like risk management, 10% is trade management, 5%, 9% is system, and then 1% is confirmations. That's how I categorize trading, I think. from? Is there anything that specifically sticks out to you? Tom, so I pull it from pretty much every, if we're looking for buy positions, I pull it from pretty much every low to the most recent high, and I only keep the fibs on that line up with something. So you'll notice when I mark up, and you'll see this each night, I'll pull it from this low, I'll pull it from this low, I'll pull it from this low, I'll pull it to this low, I'll pull it to this low, I'll pull it to this low. But if they don't line up with anything, then I won't keep them on. It needs to line up with something, okay? So for example, perfect example is the fib that I pulled from here to here. There's a golden pocket there. It doesn't really line up with anything. Like, we've already hit that high. There's no high volume nodes there. There's no high volume nodes there really. It doesn't really line up with anything. So I'm not going to have it on my chart. I want it to have confluence, which is basically multiple things lining up with each other. On the support account, Tremaine, they adjust for spreads on a night Z, closes every night. So yeah. Anyway, guys, we'll finish up this live here. Hope everyone enjoyed the live. I think we went over some very, very, very good points on tonight's live. And again, if you're sat there and you're confused about anything, please either keep the questions on you and ask me in the next live. I'm going to do a bootcamp live, which is sort of less questions and more just like formal, going over a specific topic. We do have Q&A sections throughout though, but save them and ask them on the live, and I'll go through them on the chat, or you can drop me a message on Telegram, which is linked on the YouTube description. Drop me a message, I'll happily answer any questions, and we'll finish it up there, guys. So hope everyone had a great night. I hope everyone's having a great Christmas as well. We're getting close to Christmas, and yeah, guys, take care, and I'll see you all on the next one. See you in a bit, guys. Take care. See you in a bit, Z Designer. See you in a bit, Jono. Chigsy, some great questions tonight, mate. Really, really, really good, and I hope they were. I hope I gave equally good responses, mate. See you in a bit, Drew, Jason, Chris, XR2. Take care, guys. Have a great night.